Hey guys, 𝗲𝗲𝗶𝗃 with the Trading Doggy Style newsletter. I said I'd do a quick video just from a price action perspective on identifying that trend day from Monday the 8th and some of the things that we can look for. We'll do a more in-depth video for the members. It's a little bit more advanced and involved, but sometimes candles is all you need, and so we'll go ahead and walk through that. So the first thing is that we had a setup. Our number one setup for the night was a look below and fail of this 19 3/4 to 22 range, 4700s. And so you can see we sort of chopped around overnight a little bit to the downside, and we get this sort of late, just aggressive puke through this spot, which was the prior day Friday's value area low and low of day. And if you're not familiar with those terms, it's fine. For this video, it doesn't matter. You can see the reclaim and then just an absolutely beautiful back test. So my European subscribers nailed this. I'd say one of my setups, or sometimes two, play out overnight while us in the US are sleeping. And you know what? Good for them. It frustrates some of us sometimes because they tend to get some of the juicy ones, but it is what it is. So they grab this and they run with it. So from there, I'm going to take this off here. We get into the open. And so this arrow is pointing to the open for the day. So the first thing we're looking for at the open of any session is, obviously, what's the first move? It makes sense, right? Are we buying or are we selling? And is there any interest below the open or above the open? And so in this case, you can see that we drive cleanly higher. Very, very strong move up. Just a tiny, tiny little, what is that, like a tick maybe? Lower wick, 39 1/4. No, a little more than that. A few ticks. Drive straight up, and we get this initial sort of swing high in this next candle. Not really getting anywhere. Now, this was a huge, huge spot. This was our first target, actually, for this trade. And so this was just a massive spot. And so shorting here was probably reasonable. And the thing that you're looking for, though, is from there, can sellers then take it below the open? Okay, so we get this drive lower, again, at an enormous spot. And context was really pretty bearish. We'd had this big sell-off, right? And sellers, they can't do it. Okay, so get snapped back up. Okay, fine. It's still a big spot. Let's test it again. And it, kind of looks like sellers are, absorbing these buyers here. And maybe they're going to take this, right? We get another candle that wicks down, and it's slightly higher than this candle. Okay, you can see it's just a little bit higher. And so when I see that, the first thing is there are aspects of this candle that have not been touched, this 5-minute candle. And so I refer to those as 5-minute single prints. And if you're familiar with market profile, there's no such thing as 5-minute single prints, but that's how I roll. I apply concepts from various aspects of trading to my own. And so while a single print is typically referred to as a 30-minute period, I use it on all time frames. And so this is protected. Just the last few ticks, maybe there's 4 or 5 ticks here that were never touched. So this, if you're short here and we make a higher low, we can't even get back to the open. It's time to cover. Now, I'm not saying that that this is a trend day up at this point necessarily, but you can see we've got trend candle, we've got balance, sort of chop, balance, and then trend. So this is a strong move. And until that is reversed, and to me that would be trading back below the low of this candle, until this is reversed, trend is in the cards. So we've talked about identifying early with this initial move. Can we then take out the open? Does that look like a trend day? Does it not look like a trend day? And so in this instance, the evidence so far suggests that it could be, right? So we get trend, balance, trend. Sellers have nothing so far. So these white lines that I put in here, this first white line is the high of the first 30 minutes, which is the 30-minute opening range. And then this second white line is the high of the first 60 minutes. You could call it the 60-minute opening range. A lot of traders refer to it as the initial balance. But either way, we get a press higher. This is the end of the first 30 minutes. We get a press higher above that range, pull back within range. And where do we pull back to? We pull back to this area of balance. We hold it perfectly. Okay, we fail at this spot again. We hold it perfectly again. So the end of the first hour is this candle here. And we're trading right back at the highs. And what happens right when the 30 flips? Boom, we get another move up. General rule, for sure with the initial balance, if you're trading above the initial balance, you don't want to be short. You can apply that to the 30-minute opening range. The point at which you get to the initial balance in the 60 minutes, that just becomes stronger and stronger. You do not want to be short. And this, if you're not in anywhere in here, okay, this is your entry. You get a perfect back test of the initial balance high and go. So I'm entering here every single time. and I'm risking, probably here. I don't want to get back into this area of balance or consolidation or chop. I want to see trend, balance, trend. We get this balance here, and then we sort of go. And so again, until that's reversed, we want to stay long. So you could have taken this back test here, just from a price action perspective. Again, we knew that this was a really, really strong area. So we're back testing an area of balance on a short time frame. So this would have been a reasonable long here, back test here. And then this is perfect. I mean, this couldn't be better. And so from there, you are by definition trending. The fact that you are above the 30-minute opening range, you're above the 1 hour opening range, you have back tested it and you have held. It's pretty much impossible to be short and really get anything out of it. And so if you look back to the overnight, and I know it's always easier to look at this in hindsight because I'm sure plenty of people tried shorting all the way up. We've all done that at some point in our trading careers. But I mean, you can just see from a basic market structure perspective, you've got a low, you've got a higher low, you've got a higher low, you've got a higher low, right? We're making higher highs and higher lows, and that just doesn't change the entire day. Like it never changed. And so until that does change, sellers have shown you absolutely nothing. There's no reason to be short. And more importantly, you can simply hold some runners. And so, for our setup, we were trimming. That's just kind of how we do it. We take some profits quick and we set stop losses. We don't take losses. We don't let green trades go red. So we were trimming 27, 35. We were trimming in here. And we were just given no reason to sell if we were long. Now, plenty of people did not have the overnight position, right? And so shorting here was reasonable. I think I might have shorted here actually. But you're basically panic covering when you see this and you can't get back to the open. You just get out and you roll with the trend. And so just again, a few basic price action techniques that you can utilize. So again, interest below the open, there's not. Can we get back to the open? We cannot. Certainly can't even get, can't get below it if we can't get to it. We've got an area of balance, we've got trend, we've got balance that is holding this prior balance, and additional trend. So again, this looks easy in retrospect, but these are the entries that you would have taken. This one would have been perfect. This one would have been perfect. And then you just hold on for Valhalla with runners, and you can just move a stop up if you want. Let's say you have like 5 contracts, right? And you're entered here. Maybe you take one off here, and at that point you set 4 to break even. You come up here, maybe you take one off and you've got 3 left, and you set a stop for one of them here. I mean, this is just like, they're super obvious stops, right? Market likes to run those all the time, stop you out. But on a trend day, the trend is pretty much going to be over if that occurs, right, on a strong trend day. So you could set 1 to trail and stop out here, and then your other 2 at even if you want to, and then just, keep moving that up so that you're not giving back too much in the way of profits. You get a huge move up like this where it just kind of goes parabolic. You want to take some off into this. And then just kind of, again, trail a stop up higher. At this point, you don't need stops at break even. You can kind of walk them up somewhere in here. And this was the squeeze spot. This was our pivot for the week. Let's basically call it 4773. We were using a range of 71 to 75. And so that's why this happens. They're also, as it turns out, I found out after the fact, I don't watch flow during the day. I just watch price. There was some huge call seller that was selling calls there, and he got squeezed. And it was like the market just came after him, which is very interesting, and I hope not to see that on the sell side, squeezing put sellers. But again, just some super basic price action techniques you can use to identify a trend day early. The first thing is the fact that we left these 5-minute single prints, which then translated into 30-minute single prints. Let me change the 30. So here's the open. Okay, so the next 30-minute period didn't even come close to touching this whole range of this candle. Very, very strong. So when you see that, when the second period of the day, the second 30-minute period, can't really make any progress in that first one, again, just stay long. Then you get, the next period just kind of rips straight up. And, what's left behind, this period never even touches the range of this 30-minute period. Okay, so this is very, very strong. And those are just a couple of little tricks that you can look for in potentially identifying trend days. Hope you guys enjoyed this.